Hey everybody, this is Roberta Eastman from Home Buyers Inventory, and thank you for joining us today. Today we actually wanted to talk about how important something is, and that is how important is a credit score in the home buying process. So in our previous article, we discussed what is a credit score and how is it calculated. Moving forward in this article, we're going to discuss how important a credit score is in the actual home buying process. For starters, your credit score determines a lot more than the loans you can get and the interest rates you pay. Insurers use credit scores to set premiums for auto and homeowners coverage. Landlords use them to decide who gets to rent their apartments. Credit scores even determine who gets the best cell phone plans and who has to make bigger deposits to get utilities. In other words, credit scores are a financial tool. Whether they're a lever or a hammer depends on how good they are. And the question is, why do credit scores matter? Since credit scores have become such an integral part of our financial lives, it pays to keep track of yours and understand how your actions actually affect the numbers. See, you can build, defend, and take advantage of great credit regardless of your age or income. A credit score is the basis or foundation of whether a certain person is a good payer and has good financial stability. And with this, you can leverage great scores into great deals, like in a rent-to-own home program. Bad scores, on the other hand, they can hammer you, and that means missing out or paying more. So one of the things we're going to cover today is how do you build credit without debt? See, millions of people don't have bad credit. They don't have a credit score because they haven't used credit, or they haven't used it recently enough to generate scores. But two of the ways you can build credit include applying for a credit builder loan. This places the money you borrow into a certificate of deposit or savings account that you can claim after you've made 12 monthly payments. Many credit unions and community development financial institutions offer these products called credit builder loans. So it would be a local bank, a small bank, community credit union. You can go to them and ask them about a credit builder loan. Another way is to apply for a secured credit card. This gives you a line of credit equal to the amount you deposit with the issuing bank, and it helps build your credit. Once you have a score, you can use a credit score simulator to see what actions might help and might hurt. You grow credit with good habits. And good credit habits include paying your bills on time, and that is crucial to growing your scores. In all of the credit world, nothing counts more than paying the bills. In addition, what helps is paying balances in full. You see, there's no need to carry debt when your goal is growing your score. If you do carry balances, try to pay them down as quickly as possible. What everybody is looking for is to see how well you can maintain and balance the money's due to how fast you can pay it off. So that organically and quickly increases your score rather than holding a balance over and paying it monthly. Now, there are times when you want to do that for credit score purposes, but if your goal is to grow your score, then pay your balances off in full, and if you absolutely have to carry balances, try to pay them down as quickly as possible. Light but regular use of your credit accounts is also important. And know your credit limit on each card and charge no more than 30% of that limit. And here's another big one. Avoid closing accounts if you're trying to improve your credit score. Now, I know that sounds counterintuitive. And once your scores are high, over 760 or so, you can close an account or two without major damage, but try to keep your highest limit credit cards open. And the reason that it seems counterintuitive, you're like, well, if I close it, then I won't have that credit. Yes, but there's another piece of the credit report and how it's calculated, and it is the length of time that you have a credit card or a loan or a mortgage, whatever it is, it's the history that they're looking for. So you do want to make sure that you're not closing out accounts. And again, Once you get to a certain score, if you wanted to close out one or two, you could do so, but really do try to keep your highest limit credit cards open with little credit being used. And you can learn more on how to improve your credit score by viewing our previous article. You can click on the Improving Your Credit Score link. To learn more, you can visit our previous article by clicking the Improving Your Credit Score link. Because once your scores are high, over 760 or so, you can close an account or two without major damage, but try to keep your highest limit credit cards open. And again, to learn more, go ahead and click on the link, take advantage of your good credit. And then you can find this at our website at Home Buyers Inventory. That's www.homebuyersinventory.com. We'll see you on the other side, and you can get more information on these types of articles and many more to help you get into home ownership. Titled, Take Advantage of Your Good Credit. So thank you for joining us. This is part one of how important is a credit score in the home buying process. Make sure you stay tuned or visit our website for part two. And you can visit us and find that at www.homebuyersinventory.com. Thanks for stopping by. We appreciate it. If you haven't liked our Facebook page yet, please do so. Please leave a review as well. That helps others find us, and we can continue providing the information so people can get their credit score to where they need to in order to go get a mortgage, or to even join us at our rent-to-own home program at Home Buyers Inventory.